Hello, everyone. I want you to really listen to this because the next 5 days could change everything. 5 days from now, the United States government is scheduled to shut down again. Most people hear those words and shrug. They think it's political drama, the same old fight in Washington that doesn't affect their lives. But this time is different. This time, something much bigger is sitting beneath the surface. Something fragile, something dangerous. And when that shutdown hits, or even if it is barely avoided at the last second, something in the financial system is going to crack. Most people will not see it coming. But you will, because I'm about to explain exactly what is happening and why silver is sitting at the center of it all. To understand what's coming, we need to look back at what happened the last time the government shut down. In October 2025, the shutdown began. Almost immediately, gold surged to new all-time highs above $4,300. Silver didn't just rise, it exploded, climbing nearly 60% and smashing record after record. That shutdown lasted 43 days, the longest in American history, and when it finally ended, something surprising happened. Gold and silver didn't crash. They didn't fall back down. They kept going higher. That's because the shutdown itself was not the real cause of the move. It was only the trigger. The real cause was something much deeper, something structural, something broken inside the system. And that broken structure is still there today. It didn't heal, it didn't reset, it got worse. Now we are 5 days away from facing that same trigger again. January 30th, 2026. That's the deadline. That's when funding runs out for most of the federal government. The House has passed some bills. The Senate still has not. They have 5 days to act. Maybe they will. Maybe they won't. But here's the part almost nobody understands. It almost doesn't matter anymore whether the shutdown is avoided or not. The damage is already happening. The setup is already in place. The fuse is already lit. Right now, 4 major threats are converging at the same time. Each one on its own would be enough to support higher silver prices. Together, they create a perfect storm, a setup that could send silver sharply higher in a very short period of time. The first threat is something called a data blackout. When the government shuts down, a lot more stops than people realize. Economic data stops. No inflation reports, no jobs reports, no GDP updates, no consumer confidence numbers. The agencies that collect and release this information simply close. The Bureau of Labor Statistics shuts down. The Census Bureau shuts down. The entire flow of data that Wall Street, hedge funds, banks, and even the Federal Reserve rely on goes dark. Think about what that means. The Federal Reserve sets interest rates based on economic data. Wall Street trading systems react to economic releases. Risk models depend on fresh information to calculate probabilities. When that data disappears, the entire system is forced to operate blind. During the last shutdown, markets went 43 days without reliable data. Nobody really knew what was happening in the economy. And when the data finally came back, the truth was ugly. Job losses were far worse than expected. Consumer confidence collapsed to record lows. The market had been guessing, and it guessed wrong. Uncertainty is poison to financial systems. When nobody knows what is really happening, fear rises. Volatility rises, and when volatility rises, money starts moving into assets that don't depend on government reports or political stability to have value. Gold and silver thrive in that environment. During the last shutdown, silver gained more than 11% in just 1 week, not over months, in days. That was just from uncertainty alone. The second threat is far more serious. It's what's known as a collateral shock. The United States already has a massive debt problem, over $36 trillion and counting. Interest payments alone now exceed $1.2 trillion per year, more than the entire defense budget. When the government shuts down, credit rating agencies start paying attention. They ask hard questions. Can this country govern itself? Can it pass basic funding bills? Can it manage its debt responsibly? We've already seen what happens when those questions get louder. In 2023, the US was downgraded by Fitch, partly because of political dysfunction. Another shutdown could easily bring more warnings or even another downgrade. And that matters more than most people realize because US Treasuries are the backbone of the global financial system. They are used as collateral everywhere, in banks, in hedge funds, in money markets, in the repo market that keeps the system running day to day. If confidence in that collateral weakens, even slightly, margin requirements rise, liquidity disappears, funding costs jump. We saw this in March 2020 when markets froze and the Federal Reserve had to step in with massive emergency support. When collateral breaks, the plumbing of the financial system breaks with it. And when that happens, people rush toward assets with no counterparty risk, assets that don't depend on banks, governments, or promises. A silver bar in your hand doesn't rely on anyone else to function. It just exists. After the panic in 2020, silver went on one of the strongest runs in its history, more than doubling in less than a year. The shock creates the crisis. The response fuels the rally. The third threat is something very few people are paying attention to, but it may be the most dangerous of all: a liquidity freeze. Right now, the Federal Reserve's reverse repo facility is almost empty. This facility used to hold over $2 trillion in excess cash. That money acted as a buffer, a safety net. When stress hit the system, that liquidity could flow back into markets and stabilize things. That buffer is now gone. At the same time, the Fed is still shrinking its balance sheet, still pulling liquidity out, so we are heading into a possible shutdown with no cushion, tightening conditions, and rising stress. That's how funding markets seize up. We've seen this movie before. In September 2019, overnight funding rates spiked suddenly. Banks were scrambling for cash. The Fed had to inject over $100 billion per day to stop the panic. In March 2020, it happened again, but on a much larger scale. The warning signs are already flashing now. Funding spreads are widening. Stress is building before the shutdown even begins. When liquidity freezes, everything sells at first. Even silver. People sell whatever they can to raise cash. But then the Fed steps in. Liquidity floods the system. Rates get cut. Money gets printed. And when that happens, silver doesn't just recover, it launches. From under $12 to nearly $30 in 5 months in 2020, a 150% move. The freeze creates the setup. The response creates the explosion. The fourth threat is recession. Every week of government shutdown reduces economic growth. The economy is already slowing, manufacturing is contracting, consumer confidence is weak. The yield curve has been inverted. A shutdown could easily be the push that turns slowdown into full recession. Recessions feel scary, and in the short term, they can hurt silver because of its industrial use. But history shows that recessions are incredibly bullish for precious metals. Why? Because recessions force rate cuts. They force stimulus. They force governments to spend money they don't have. That weakens currencies and pushes people toward hard assets. In every recent recession, gold and silver dipped briefly and then surged dramatically. This time is different because silver's industrial demand isn't optional anymore. Solar panels need silver. Electric vehicles need silver. Medical equipment needs silver. Data centers need silver. There is no substitute. Even in a recession, this demand doesn't disappear. At the same time, investment demand rises. Both sides of the equation are bullish. And that brings us to where silver is right now. Paper prices say one thing. Physical reality says another. China has restricted silver exports. Supply is tightening. Physical silver is trading far above paper prices in global markets. Inventories are draining. Silver has been declared a critical mineral. The deficit has lasted for years. History shows that when gold and silver bull markets accelerate, silver tends to outperform. The gold-to-silver ratio compresses. If gold stays where it is, and that ratio moves toward historical levels, silver prices far above today's levels are not just possible, they are logical. The shutdown is not the story. It's the spotlight. It exposes weaknesses that already exist, weaknesses in debt, in governance, in trust. Silver is not about politics. It doesn't care who is in power. It cares about supply, demand, and confidence. And right now, confidence in paper promises is fading. Cash feels safe, but cash is still a promise. Gold and silver are not. They have survived every system failure in history. This isn't about panic. It's about understanding risk. The next 5 days could be volatile. The next 5 weeks could be historic. And the next 5 months could change everything for those who are paying attention. Stay alert, stay informed, and understand what's really happening beneath the headlines.